Great. Everybody, welcome to the live stream. We got a lot of stuff to cover. So first of all, thanks for stopping by on this beautiful Monday morning. And we're going to go over a bunch of different things. And I got to tell you, things are looking pretty decent. So first, of course, we're going to do a little market recap. We're going to do things a little bit differently as far as taking a look at crypto and traditional market. Also, we're going to take a look at good news on the earnings reports, which might turn things around because you know what? Bar is set pretty low. Also, we're going to take a look at going long. Short-term buyers are getting wrecked. And we're going to take a look at some on-chain analysis, monthly returns, and hodl waves. And then there's a last piece I want to talk about. Skybridge and the Mooch, they have the right mindset. And really what they're doing is they're putting their mouth where their money is. I got to actually redo that one because I didn't spell it right. And lastly, we'll go over a little bit of Q&A, so hold your questions till the end. So first up, welcome. Great Monday morning. What's going on? Besides that, the market is took a little bit of a dip yesterday on Sundays, which it always seems to do. And that's just how it is. So we'll take a look right now, actually. And if you're here for the live stream, again, welcome. If you're here for the replay, just know we'll have timestamps below. And we'll try to get to everybody's questions at the very end, so hold them until the end. Let's jump into it, huh? So this is what we got. Before we start to look at the crypto market, let's take a look at where I think things are somewhat correlated. Now, I think there might be a decoupling at some point, but this is the S&P 500 right now. And it is almost 9 a.m. here in El Paso, Texas. So East Coast, we've been open for, gosh, what? 9, 10, 11, about an hour, 2.5 hours or so. And we can see that the traditional market is a little bit jittery. And what's going on is because there's some earnings report coming out. So this is actually over just today. Let's take actually, let me refresh this. Maybe it's gone up because I think NASDAQ has gone up as well. No, not so much. Let's take a look at the 5-day. Not so great. 1 month? 6 month? What are you going to do? All right. So NASDAQ, and this is where, if you've been following me and some other people, this is where we think that things are a little bit more correlated. NASDAQ is more tech stocks, and it seems like our sector is being treated like a tech stock as opposed to a risk-off assets, which I think is what it really will become as time goes on. But again, just to zoom in to give ourselves more stress, we'll zoom in today, huh? Let's see how it's doing over the 1 day. Maybe it's gone. Hey, look at that. Not too bad. So if we're looking at it just for today in the last 2.5 hours, we started off pretty junk, but maybe some earnings reports have come out and it's kind of climbed up, bounced out around. So hopefully you'll see, not so much. Well, let's refresh this. Amazing. Amazing. It was just low. And of course, now the last hour, it's gone up a little bit, like a percentage point or so. Let's take a look at some stats. How are we doing as far as the total crypto market? 1.9 trillion. So again, it looks like that's what's going on. And I will tell you right now that the rational person, me and you, hopefully, the people who are investing, they don't really trade a lot. We're mostly a bunch of hoilers. There's some traders out there and do whatever you want to do. But just remember, like we had talked about on, I think this was last week, Thursday or Friday, just remember that this was from, there was a video we did, and it featured Steve Grasso from Wall Street, and also he's on MSNBC and Squawk Box, and he talked about how, he goes, look, there's going to be bots, and there's these things called tape reading algorithmic bots. And when people speak on these news shows or something comes out, especially when Jerome Powell spoke and everything dropped down, people are like, why is this happening? He goes, it's because the bots are, in control, and it starts a cascade effect. Not bots like we see, but just a little bit more advanced as far as algorithmic. So one bot sells, another bot sells. Before you know it, traders pick it up and then we sell. And that's what causes a little bit of irrationality. So if we see that earnings reports come out and it's not so great, just expect this to go down precipitously because of bots, also because of traders. And that's really what's going on. So that's what we have as far as like the beginning. And this is what we have. So here's the question. Earnings report. And hopefully it turns things around. And I can tell you right now, I just did a quick little poll. And it seems like most of you believe it's correlated, but some of you don't think it doesn't really matter. Because in the long run, who really cares? So let's just jump into some good news. So this is the Daily Upside. It's a newsletter that I get. There's a link in the description. You can sign up for it. It's free. It just comes and gives you all the macro events that are going on. These guys work pretty hard for a free newsletter. Now, of course, there's a little bit of advertising in there because, hey, nothing's for free. But I like how they put this together. So here's what we got. First of all, I didn't realize, but the markets don't like uncertainty. So, of course, around political elections, things get a little bit wonky. So there is some good news, depending on who you believe. Emmanuel Macron became the first French president to win re-election in 20 years. So I guess there's a little bit more stability over there. If you're from France, I'm sure some of you hate your president and some of you like your president, just like in every other country, but that's not the point. The point is that when we have a little bit more stability, hopefully it means the market will actually even out. Here's what we got. 180 companies this week will report their quarterly results. 180. So that's just shy of 180 companies on the S&P 500, worth close to half of the blue chips index market value report results by the end of this week. And that means there's some big hitters like Apple, Microsoft, Amazon, and Alphabet, and they're worth a combined $8 trillion, or a fifth of the S&P 500. Now, the S&P 500 is down 11% year to date, reflecting the expectation of 10 rate hikes over the next 18 months. So if you think that Jerome Powell and his rate hikes are priced in, I got to tell you, that's what we all thought. And then last week we saw, as soon as Jerome Powell spoke about raising those rates, then of course the market tumbled. So this is something that's on the horizon. However, here's the good news. Against an ominous macroeconomic backdrop, corporate earnings have actually done pretty well, actually. And if we take a look at the data, 78%, let me pull this up, 78% of the 99 S&P 500 companies that have reported first quarter results so far have beat the analysts' expectations. Now, you don't hear that too much in the news. You don't hear a bunch of stories about how, hey, a lot of companies have done pretty well. All you've been hearing lately is how Netflix has gotten hammered and how awful it is and how the sky is falling. And that's just par for the course. What works in news? Usually a lot of negative stuff. That's what gets people to click and to come in. Usually good news doesn't really work out too well. And you can see that right now. So 78% of those companies are doing pretty good. This year's average beat rate easily eclipses the historical average of 66% of overachievers since 1994. So 94, it's 66%. I thought it was the most fantastic year. And so far, 78% have beat analysts' expectations. Now, the real question is, will that continue with Microsoft and Apple and all these big guys? So that's the good news. But just so you know, Alphabet's earnings are expected to fall less than a percentage, or 0.7%. And analysts see Apple earnings climbing a meager 2%, which, you think about it, you're like, well, it's still going up, but the market is like blood hungry. They must have these huge gains to actually get excited. Unfortunately, that's what we live in. So this is the next thing up. Big tech firms are also staring down new regulatory pressure that could dole out billions in penalties. I wasn't aware of this. This is something that I think we should all be aware of. European policymakers agreed over the weekend to reforms that will let regulators fine online platforms with 45 million or more EU users, or the European Union, up to 6% of their global annual revenues if they fail to crack down on illegal or harmful content. I don't know how they're going to do that. It just sounds like another way to tax things. Facebook owner Meta, based on their revenue of last year, could be fined up to $7 billion. I'm not sure if that's a big thing for them, but $7 billion might be a drop in the bucket, but it is a way for tax to come in. And then here's another one. Before I read this sentence, just know that this is not a political channel. So if you're going to give me a thumbs down, give me a thumbs down because the content was just awful and you got absolutely no value whatsoever. Don't give me a thumbs down because you don't like a particular president or something that he says. So this is what we got. Former President Barack Obama last week called on the U.S. to crack down on disinformation by reforming a law that protects online platforms from liability for user content. Should make for lively earnings. So just so you know, that's called Law 230. That's what came about in the late 90s. That's what allowed the internet to flourish. So there's a big difference between someone calling for it and it actually happening. So that's where we are for the earnings report. I think it's going to be a pretty interesting week. Again, the bar has been set low, so hopefully we come out unscathed and we can start to build. So that's what we have. Let me just think about that in the comment section. And let's talk about going long, because I always talk about when in doubt, zoom out. But in all honesty, sometimes we got to zoom in to see the picture. And that's what we just did right there. So now let's zoom out and see where things are going. So I asked a question on Twitter again. If you had $10,000 and you were required to choose between entering in a short or long position, what would you do? And the majority of people said, I'd go long. Sounds good, but what does that mean? What does that mean as time goes on? Well, if we take a look at long versus shorts, this was on-chain analysis from End of the Block. And they said this: traders are holding less than a month tend to follow price action, and in many cases sell at a loss. So I think this really comes down to either, and of course you want to call it paper hands or weak hands, whatever you do. I don't really like to use that term because I think everybody's situation is different. A lot of these people, or some of these people actually might be, swing traders, just kind of getting in and out. But it seems to be balance held by traders is the lowest value since January 18th. And of course, it seems like the less time that you hold it, the less profits that you actually do. And now we're below January 18th as far as like a low volume as far as traders. So the question then is, how is that looking as far as like for the month? And this is one of my new favorite websites. I'm talking about for like the last 30 days or so. This is Ben's Into the Cryptoverse, links in the description. It's not an affiliate link. You can check it out. But on top of all these great charts that he has, one is one that I can't show you, unfortunately. He told me not to. A risk assessment, and you can see just how low or how high risk is right now. But I got to tell you, just between us, it's pretty low as far as risk because the price is kind of tanking for a while. But if you take a look at April, statistically, over time, and of course, past performance is not indicative of future results, but April was usually a pretty darn good month if we take a look at it. 34% in 2020, 2019. The worst one before this was 2015 at negative 2.9%. But so far, to date, this April has been by far the worst April that we have seen for quite some time. And then also, if we take a look at a monthly average, I'd like to take a look. What we're taking a look at is 90 days. Let's see, 90-day average. So if you had bought 90 days before or 3 months before and then sold in this month, here's what would have been your return on investment. March, over all time, has been statistically one of the best ones. In April, pretty much the second best one. But of course, now that we're looking at it, not so much. And this fits into my thesis about sell in May and go away. Maybe it should be sell in April and go away for crypto, because it seems like May, June, July, August, you have a little bit of rally, September, then you get back around October, November, December for some other gains. This is where I would, you might want to sell and then buy again. That's not financial advice. It's just what I'm doing. But you can see that there's quite a dip here. And if you're looking for fantastic gains in May, June, July, statistically, not so much. However, if we take a look at this, these are called the HODL waves, long-term holders versus short-term holders. I will just say this goes back to exactly what Into the Block was saying. The less time you hold, the more problems you have as far as like gaining different revenue and gains. So if we take a look at short-term holders, it kind of follows this pattern, which is as the price goes up, and the white line is what the actual price is. You can see that as the price goes up, the individuals that hold for a short term, 1 week to a month, they start to just follow the trend and go, I'm going to buy up here at the top. And they start to sell off, or they sell more as it goes down, and just don't accumulate. And then they buy a bunch here when the price goes up, and then down again. And that's what I think a lot of us did in the very beginning. However, if we take a look at the long-term holders, and this is just what this chart shows us as a month to 3 months. I don't know if that's really a long-term holder, but okay. You can see that, here's in 2017. as the price dips, these people start to accumulate. When the price goes up, they sell off. When the price goes down, they accumulate. And when the price goes up, they sell off, and off we are. But there is something interesting about this one I found fascinating. I think there's a fine line between people who hold or hodl for quite some time and people who just drink the Kool-Aid and just don't see what's in front of them. So here's what I'm talking about. If we take a look at people who hold for 1 to 2 years, they did pretty darn good, actually. Again, you can see that they start to accumulate when the price is kind of going or flattened out. And then when it starts to peak, which here's the price, they just sell off. And again, as the price goes down, they start to accumulate. As it goes sideways, this is where I make all my money, actually, just dollar cost averaging. And then, of course, as it comes down here and the price starts to rise, they start to sell off as the price peaks. Now, when it goes down, same thing. That's just for people from a 1 year to 2 year. But check this out. If you take a look at the 3 year to 4 year people, oops, do that one more time. Get rid of all of them. Sometimes it seems like when they come in here, they, even right here, so they actually sold off right before the peak of, this is 2017. But then it's like they try to do it again, and they came over here. Oh, they did sell off, forget that. No, I guess hold on. There's one more I want to show you. 2 years to 3 years. Yeah. Oh, no. I guess I was looking at the 6 months to 1 year. So yeah, it's the same thing. It seems like the more people that hold for a longer time, of course, they buy these dips, come down, sell off. Then they come over here, they sell off as it starts to peak. And now they're over here just accumulating. So I guess, yeah, same thing. So what do you think about that in the comments section? Interesting that people do the same stuff, which is just accumulate and they sell off. I think that's probably the best mindset. Speaking of which, last story, Skybridge and the Mooch have the right mindset. And what this is I think this is the bigger picture. Right now, we're not in the greatest market, as you might tell. But I think in the long run, we'll be okay. So here's what it comes down to. Skybridge goes all in on crypto, betting on tremendous growth ahead. So Skybridge manages a $7 million Bitcoin fund, among others. Been actively working to get a spot Bitcoin ETF approved by the US. Good luck with that. Scaramucci said the firm is, and this is Anthony Scaramucci's firm, Skybridge, said the firm is repositioning itself to eventually be a leading crypto asset manager and advisor. He said, we made a decision during the pandemic that we had to re-litigate our entire portfolio. There's a pre-pandemic world and a post-pandemic, and a post-pandemic world has a lot more deficits. For us, we think the crypto markets represent tremendous growth. It comes with volatility, but I think over the next 3 to 5 years, we like the trajectory. And the question was, I always wonder, why did they get into it so heavy? Because, Skybridge was not a big proponent up to a couple of years ago. And it came down to this. Director of Business Development John Darcy said that the firm's growing focus on crypto was brought about due to a huge drawdown in the credit portion of the firm's hedge fund manager portfolio, meaning it didn't really perform too well. I think that's a lesson for, I think, a lot of different hedge funds out there and a lot of people getting into stocks. I think they're overinflated, but they still buy into it. I still think it's a very risky asset, and they still treat it, some of them people treat it like a risk off, even though it's really risk on. He said what we decided to do was a portion of the capital that was previously allocated to credit managers was invested directly into crypto like Bitcoin, Ethereum. Then they're also going to rotate capital into crypto asset managers like Multicoin, Polychain, Pantera, and things of that nature. So I think they're going to put their money, like I said, where their mouth is, and then kind of come out ahead, because I don't think there's a lot of huge, tremendous gains from equities, especially with what's going on. Anyhow, let me think about that in the comments section. And that concludes the stories for today. So look, if you like today's video, give it a thumbs up. I'll consider subscribing. All things to talk about are time sensitive. So that takes care of the news. Wrapped it up in about 19 minutes. Let's go on to 5 questions in 5 minutes, and we'll get out of here and enjoy the day. So let's take a look at the questions. Let me get rid of this banner. It's kind of annoying. All right. So first up, here's a good one. Mark says, how does Bitcoin work globally when so few own such a large percentage of it? So really, if you think about it, I'm going to show you something. Let me sign in to, let me show you. This is into the block, and this is on-chain analysis. So if we take a look at, we'll take a look at the network stats. Excuse me, ownership, all ownership stats. And actually what we should do is take a look at Bitcoin wallets. So as far as like, I think the big question is there a concentration of Bitcoin? And we take a look at it, there's whales, investors, and retail. Investor, whale, and retail. So what's the difference? An address that more than 1% of the circulating supply, Bitcoin in this case, would be an investor. An address that owns between 0.1 and 1% of the circulating supply is retail, or a retail. Excuse me, retail 1.1% of circulating supply. So if it's more than 1%, it's a whale, and that's just this sliver. If it's 0.1 to 1%, that's an investor volume. And the rest is retail. And that is the majority of where things are. Almost 90%, or almost 18.88 million, is in the hands of very small wallets who don't really have that much. Now, as time goes on, I think the bigger question then is, how does that actually disseminate between the 7 to 8 billion people on the planet? Well, just remember, I know people say, well, how is everybody going to have one Bitcoin? They're not. That's what it comes down to. They're not. Remember, there's 100 billion Satoshis into one Bitcoin. So we got enough Satoshis. We just don't have enough one full Bitcoin. That's why we're always talking about just if it's a pretty decent goal, not investment advice, but to actually own one complete whole Bitcoin. I think that's the crux of it. All right. Hope I answered your question. And next one, crypto gods. The crypto market is so much fun, but I'm not making any money. Yeah, I was the same way. I was the same way as you. In 2017, I didn't make anything. I bought it some highs, and I just watched it all go down. And I had two options. I could just sell it all and just take a loss of like 60%, or I could just keep buying and see where things went. Luckily, I just kept buying, and it worked out okay. I'm not in the business of losing money, so I felt like, well, I don't know when this train is, or at what point we arrive at the destination, but I think this is the next evolution of money, smart contracts, layer 1s, layer 2 solutions, so why not? And it worked out okay. I think that's where we're going to go. Alpha Gaping, when will people stop using fiat and move 100% to crypto? They won't. I think you have to understand that I don't think for a while people will trust just straight crypto for all transactions. And CBDCs, I think they're going to trust even less, unless it's forced upon them like in China. But correct me if I'm wrong. I've had some people here who either have lived in China or are living in China, and they're using a VPN to access. I won't tell you. And they say that the digital yuan is being rammed down their throats, but a lot of people don't trust it. A lot of people don't use it. So even you get the news out of China that says that it's doing great and there's all this adoption, the people that are on the show are like, that comment are like, no, we don't want to use that. But again, we'll see if it's get rammed down. Now, let's see. And then Mark, the same thing. I've owned Bitcoin for a year, and I would say 90% of the time it's been in the red. Yeah, that's exactly where I was. That's okay. I think as time goes on, I'm not so much big in the red because it just feels like you're just like, well, I got time, and that's it. That's why I'm always talking about dollar cost averaging instead of dumping everything in. I mean, you can dump everything in if you have that experience, but a lot of people don't. So that's why I talk about it. It's all rigged, folks. Yeah, it is. Alchemist is right. It is all rigged. And that goes to exactly my point when I was talking about these bots. That's why, like, when people talk about, this isn't going to be very popular, but I kind of feel like a lot of traders are gamblers. I lived in Vegas for 2 years, and I had a bunch of friends who were degenerate gamblers. And I'd always ask him, I would say, hey man, how'd the weekend go? Great, I'm up like $5,000. That's awesome. How you doing for the year? I'm down like 30 grand, but I mean, like last weekend was awesome. And it's like, I would only hear about the good trades. I mean, that's it. And that's just how I see a lot of traders out there. I don't think they're very profitable. They even if they add it all up and then subtract away from their capital gains, and maybe it works for capital gain losses, but I think a lot of people are in the red just trading. Not everybody, but I think not very many. And that's why I'm always talking about, well, things are rigged, and there's a lot of money going into making a lot of money into crypto. And I don't know where things are going. That's why I just say, well, I can't beat these bots, and I can't beat the people that have unlimited resources to, trade against me. So I'm just going to keep dollar cost averaging. It seems to work out okay in 2018 and 19 and 20 and 21. Let's see if it works this year. Yeah, Martin says, good. Institutional traders are gamblers with other people's money. Big difference. Yeah, it's true. But the thing is, how long are these institutional traders? How long are people going to go to these hedge fund managers, which most of them can't beat the S&P 500? It's like 90-some% can, 95% can't beat the S&P 500. So I don't understand why people keep going to them. I personally think it's a problem with education. My brother does the same thing. I asked him personally. I'm like, because he's big into equities and things like that. I'm like, listen, man, how are you dealing with this inflation and the market? And he goes, I just, I have this group that helps me with allocating funds. I'm like, what are they allocating to? I'd like to know. He's like, stuff. I'm like, what stuff? He's like, good stuff. I'm like, translation, moron, you don't know what you're talking about. And he's like, he's my brother, so I can say that. He's like, yeah. He's like, he didn't really say it in all those terms, but essentially that's what it is. So, yeah. I think it's just people who just don't know where to put it up. And so Alvio Lampus says, hey, what about Central African Republic? I did a whole video about this yesterday. As soon as that story broke. So we talked about the Central African Republic just accepted Bitcoin for legal tender. We talked about how great it is and, it's good. But I said, don't get your hopes up that it's going to really push crypto and Bitcoin to the next level, because we took a look at the GDP. In El Salvador, GDP is around $24 billion. The Central African Republic, it's around $2.04 billion. So again, it's a step in the right direction, but is it going to move the needle? It hasn't so far. Cornucopias, any thoughts? Looks like a pretty good play to earn game on Cardano. That's all I know. And I think that's it. I'll leave with this. This is good, Crypto Beats. Most friends are wishful thinkers when trading. Actually, all. Well, you got to be. You got to be as even an investor. There are psychological studies showing that the kind of personality traders have is ones that think they're smarter than everyone. I think you got to kind of have that bravado to get into trading and that. I just know the older I get, the more I realize there's so much more that I need to know and I don't know. And I think that's the beauty of getting older. You just kind of say, I think in my 20s, I thought I knew it all. In my 30s, I had questions. In my late 40s, I'm like, I don't know. I don't know as much as I should. And there's just so much out there. Anyhow, so that's it. So look, we're coming up at 30 minutes. I got to get, so just so you guys know that this week's going to be a little bit different. I've got we do a charity event for underprivileged kids. We build these obstacle courses. And we pull people in, and of course, it's just 100% goes to charity. So I have to go out there, and I'll be doing a little bit more outside work, construction and things like that, to get this thing going. So the times of these events, live events, will be fluctuating. So just be patient with me. And then that's for this week. We do the event this weekend. Should help a lot of kids. And then next week after that, we go to London for the Coin Bureau events, which we get to talk about certain things with Guy. And then I'll be there for like 5 days, and then I go to Italy. So just be aware that I won't be around for a little bit. And that's what's going on. So look, if you like today's video, give it a thumbs up. If not, give it a thumbs down. That's okay. And consider subscribing. That's it for today. So thanks so much. I appreciate it. See you on the next one. Adios.